Now, before we start talking about the Donchian channels, please take a second and subscribe by hitting the button below if you haven't already. Now, the Donchian channels, were brought to us by Richard Donchian, and he was alive from 1905 to 1993. It's a pretty long life. And I think it's a pretty good trading indicator to highlight trends and ranges and the new X number of day breakouts. But like any trading indicator, how you use it determines its value. So you can actually take a second here to download an indicator blueprint that I put together a while back. And I think it shows the better way to use some of the most popular trading indicators. And the link is in the description and up here on the right of the video. And you know, you can actually design quite a few trading strategies around the Donchian channel. And actually, it was the primary indicator for the Turtle Traders. So the channel works simply by highlighting the highest high or the lowest low of the prior 20 days. So I want you to know that the number of days for the setting can be changed to any number you want. Reading the channel is pretty easy. The upper band is the highest high of the past 20. The lower band is the lowest low of the past 20. And this middle line is actually a moving average, and it calculates the average of the previous 20-day low high. And here on this stock chart, this is Aurora Cannabis. You can see how the Donchian channel clearly shows the current 20-day high. You'll also see that the low was in place for 13 days before new lows in price are currently being made. The moving average in the middle and the contraction of the channel, it shows a market that was in a range. The turn down in the average and the widening of the channel, that can indicate trending action taking place. So the strategies I'm going to talk about, they can be used on any time frame, but all the examples I'm going to show are from the daily chart. Why? Because that's where I trade. And it keeps me out of the day trading noise of all markets, including futures, and I don't want to live in front of my computer screen. And I also find that the daily charts give me the cleanest setups and triggers that I prefer when I'm trading. And I did actually cover one Donchian channel trading strategy in a post and video called Turtle Soup, where you don't actually trade the breakout direction, you fade the move. It's a simple breakout failure trading strategy. It's simple to set up, simple to scan for, and here's the video for that. Now, trading with the trend, that's a time-tested strategy for any style of trading, whether you're day trading, swing trading, position trading, whatever. And we can use the channel breakouts in line with a longer-term trend to make good gains in our account if we catch a persistent trend direction. So trend trading breakouts with the Donchian channel, the ADX, and the simple moving average. So we're going to use the following: a 20-period Donchian channel, the 100-day simple moving average for a trend filter, and the ADX is going to be set at 25. And here are the basic rules. Is the ADX above 25? If it's yes, we continue. If it's no, we ignore the chart. Is the price above the 100 SMA? If it's yes, we're looking for longs. If it's no, we're looking for shorts. Is the breakout in the direction of the 100 SMA? If it's yes, that's a trade signal. If it's no, we stand aside. So on this chart, we see that for much of the chart, the ADX is below 25. There's no trend. So we're going to ignore it during this time. Once it starts to move above 25, now we are interested in what price does next. So in our case, price went below the 100 SMA, allowing us to short breakouts to the downside. And the Forex pair here was up over 400 pips from the breakout point that we note here at the red line. Now, Donchian channel plus the RSI trading strategy. This strategy also uses trend direction, but this time we're going to use the RSI 50 level. RSI plus 50 is bullish, RSI minus 50, bearish. Or below 50, that's better way of saying it. So we can trade both pullbacks as well as breakouts in the direction the RSI determines is the trend direction. And I'm going to treat the pullbacks to the moving average as bull flags or bear flags. And I'm going to be mindful of trading ranges. And you can learn more about trading bull flags on this video here, Trading Bull Flags. So this chart is the 10-year T-Note Futures daily chart. And we have several events here we're going to talk about. We have a pullback to the average, which looks like a complex correction. The break of the trend line to the upside, while the RSI is over 50. That's an enter near the close or the next day open. The Donchian channel has compressed here, and we see a ranging market. And while there are range trading strategies we could use, we're going to sit aside for this one. The RSI begins to climb, and we have a new 20-day breakout. Price pulls back again, falls into a range as the RSI dips below 50. There's no breakout to the downside. The RSI rises, a new 20-day high is made. That's a trade. Pull back to the middle band, price breaks the trend line for the entry. Stops can be below support or above resistance for any trade. I prefer using the average true range for stop placements and adjusting it around close swing points. Profit targets can be a multiple of your risk, support or resistance levels, or just use another Donchian channel, which is next, exiting trades with the Donchian channel. So this is an add-on strategy, and we're going to use two channels with different settings. We're going to use the original 20-day setting, and we're going to use a 10-day setting and remove the middle moving average. So in this case, we're using an objective way to take our trading profits by using a break of the 10-period Donchian channel as our signal to exit. So I want you to notice at point 1, 2, and 3 that we have our entry part of the strategy all confirmed. The ADX is above 25, indicating a trend. Price is below the 100 simple moving average, tells us the direction is down. Price makes a new 20-day low, we short. So the trade is allowed to run, and we are using the red line, which is the 10-day channel, as a means of trailing our stop loss. The small green arrow and the check mark, that shows where price finally breaks the 10-day high, and that ends the trade. So this particular short trade in crude oil futures dropped 15 bucks in price. And if you know crude oil, that is some hefty trading profits per contract. And as with any trading indicator or any strategy, you're going to have false signals. The Donchian channel is no exception. But we can mitigate these to some extent. We can trade with the trend direction, needing a close for the new high or the low, using other price patterns like triangles and bull or bear flags. Nothing's perfect, and that is why risk management is vital to any trading strategy. Channels do not offer support and resistance levels. No indicator does. And while they may highlight turning points in the market, there's no guarantee that you're actually looking at a level that's going to hold any importance in the future. So you have to backtest any trading plan that includes the channels. You have to have a set of rules, including the markets you're going to trade, and test those out with your trading parameters. So the strategies here that we talked about, they're meant as starting points for your development. Thanks for watching. Please subscribe.